Hello traders, Gary Wagner here, just about 12 o'clock in Honolulu, 6 o'clock in New York. It is Monday, September 11th, 2017, and this is the Daily Report for Gold and Silver. Dramatic sell-off in the precious metals markets with a relief rally in U.S. equities and the dollar tracking higher today. We were stopped out with a profit on our trade, which we will cover in detail when we pull up our technical studies. Gold closing down $19.50 at $1331.70. That is a drop of roughly 1.5%. Silver also trading lower on the day, $17.85, a drop of 27 cents on the day, and that all in light of a stronger U.S. dollar, up almost 0.6% at 91.85. Now, that comes at a time when we are witnessing a strong rally in U.S. equities. We had the Standard & Poor's go to a new record high, up 26 points at 2488. Dow Jones Industrial Average closing up about 259 points at 22,057. And the NASDAQ Composite closing up a little over a full percent at 6432. Events over this weekend resulted in dramatic downside pressure in the precious metals markets, resulting in a price decline of roughly 1.5% in both gold and silver. Gold currently fixed at $1331.10, putting it down $20.10 on the day. And of course, we did have an active trade. We were in fact stopped out of our trade this morning in a profit. Let's go ahead and cover that quickly. We went long this market roughly 2 weeks ago, entering the market at $12.99. As the market rose, we raised our stop to just below $13.34. So traders, you would have had your stops at $13.33 or $13.32, and that stop was effectively hit as the market broke through that price in trading late this afternoon. So we got in at 1,300, we got out at 1332 for a $32 gain per ounce, or 3,200 per contract, which amounts to a 32% gain on the trade. So traders, we have identified a couple of key areas in gold pricing recently. One is 1351, and that is the 1.23% extension of this latest rally when compared to the first leg of the rally. The second area is a one-to-one relationship, 1333, and that's the area that we broke through today. With that in mind, and the fact that we have broken through a critical area of support, the question remains, where could we see gold prices go to in the near future? Well, if we do enter some sort of a correction, we're going to need to look at a basic Fibonacci retracement, which begins at 1,200 and runs to 1361, which is really the totality of this most recent $160 rally. And the first area that we want to identify is the 23% retracement. That comes in at 1324. And then we have a 38% retracement that comes in at 1301. These are the two key areas that if we see a continuation of downside pressure, we could see. However, traders realize at the same time, some of the elements, specifically North Korea, could easily ramp up at any given moment. And the fact of the matter is, with a Security Council vote being tendered today to impose more restrictions on North Korea, we've already seen the threats that they have levied if in fact that comes to pass. And so this is a scenario and a conflict that I do not believe will resolve itself on its own. So we want to be very cognizant of events that transpire in North Korea and the UN over the next couple of days. My sense is we will see this market retrace, but I do not believe we will see a retracement greater than 38%, 1301, if we get one that deep. And the price point that I first want to see, if in fact the market continues to track lower, is 1324, if in fact the market does trade down. So traders, in as much as we have pulled profits on our trade today and gold headed dramatically lower. My recommendation is to maintain our current neutral stance or flat position in the market with no active trades, and let's let the dust settle and see where gold pricing wants to go from here. And traders, today's sell-off was due 50% a strong US dollar and 50% to selling. We're looking at a US dollar chart. Dollar did have a nice upside bounce, up about 6 to 0.7% on the day. However, the really big news is U.S. equities going to new record highs, with the Standard & Poor's closing at a new record high at 2488 and the Dow Jones Industrial Average closing 259 points higher to settle at 22,057, just shy of a new record high. Traders, in as much as we were stopped out in a profit today as the market came down about $20 on the day, closing at 1331. We had stops below 1334, so we're marking ourselves out at 32 and in at 13 for a profit of $32 per ounce or $3,200 per 100-ounce contract. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for another daily update and review. Bye-bye.